What is going on, investors? Hopefully you guys are having a great day out there. It is time to go over 5 different companies in the online advertising space. Some of these companies we refer to as social media, but in some cases like Google, they have a little bit more diversified business. But we're going to take a look at Google, Facebook, Twitter, Pinterest, and Snapchat. We're going to compare them to each other. This is going to emphasize a few things. Number one, we always say here on the channel, we invest in gold medal winning stocks. We want the stocks in a given sector that are going to win the gold medal. They're not only going to get on the podium, but they're going to win a gold medal. Today's video is going to highlight that strategy, number one, and show you why it's such an important strategy to follow. But if you want to go after silver medals, if you want to go after bronze medals for whatever reason, look, there are some reasons. Sometimes the price pulls back to a range where those stocks turn into a little bit better investment than particularly maybe the gold medal winning stock. In that case, you need to get those stocks at extraordinarily good prices. And in this case, when we look at Twitter, when we look at Pinterest, and when we look at Snapchat, most definitely the silver and bronze and just off the podium in terms of online advertising and social media in general, all of those stocks are near or at 52-week lows. So can we come in here and buy the silver medal stocks at such a good valuation that we get a strong recovery in those stocks over the next year? That is what we were going to talk about on today's show. We'll look at it from a fundamental perspective, but also a technical level as well. There'll be timestamps down below if you want to jump around to the companies that you enjoy. Now, broadly, let's take a look at things. So we have Google. I have them at the top. Their business is far more diversified than the other companies that we'll mention here, particularly because they're not tied into social media, not tied to people having to be on their website and engaging on it. Yes, they need people to do searches on Google, but that is most definitely at this point something that we do on a daily basis. We don't necessarily have to be on social media on a daily basis, but searching for something on Google sometimes is a necessity. Now, year to date, this stock is up big, up 66%. This is the gold medal winning stock when it comes to online advertising. It has the most revenue and it has one of the highest revenue growth rates. And this is based on when these companies just reported. Most of them have reported over the last 30 days or so. Google reported year-over-year growth of 41%. The 52-week high on Google is at $3,000 and we'll call it $20. It's only down just 5% from its highs. Another example, especially when we get to Twitter, Pinterest, and Snapchat, why the gold medal winning stocks hold up so much better than the stocks that are silver and bronze and not necessarily competing at that top spot. Google, by far and away, the best investment out of this group. Now we move to Facebook. Looks like they're going to delay renaming the company to Meta, so we'll still refer to it as Facebook, ticker symbol FB. Year to date, this stock is up as well, up 23%. Another example of how this company in the social media online advertising space, certainly the gold medal winner as well, probably a silver compared to Google, but its 52-week high is $384 per share. We're down just 15% from those highs. Year to date, year over year revenue growth over at Facebook came in at 35.1%, and that is a number that you definitely want to consider as we move through Twitter, Pinterest, and Snapchat, as well as we start comparing these companies to a certain degree. Now, Twitter, completely different story. Year to date, this stock is actually down 15%. 52-week high was $80.75. Guess what? We're down 45% from those highs on Twitter. This is what happens when you're a silver medalist, a bronze medalist, or in some cases like Twitter, I think you're off the podium and you start having poor performance, your stock takes an even bigger hit. That's why if you're in these names like a Twitter, like a Pinterest, like a Snapchat, I think you need stop losses. You need to know when to take profit on these stocks. Whereas Facebook and Google, you have a little bit more margin for safety. And obviously we've seen over the last year, it has proven itself in the stock performance. And quite frankly, over the last decade or so with those stocks, it has proven itself. No, Twitter has not proven itself. Down 45% year over year revenue growth. The last time it reported was at 36.8%. In a vacuum seems pretty good. But again, I just talked about how Facebook, which has a far more dominant position, not only from a revenue perspective, a user's perspective, but a profit perspective is growing almost at an identical rate. That's a problem if you're Twitter. And Google is growing even faster. I don't know why you would want to invest in Twitter versus Facebook or Google, considering they're growing at the same rate, and Google and Facebook are far superior in terms of just about everything they do when it comes to Twitter. Now, Pinterest, same story. Year to date, we're actually down 38% on Pinterest. Whoa, 52-week high was $89.90. We're down 55% from the highs. The year-over-year revenue growth, now it is pretty strong over at Pinterest. We're up 43% on that one. So that compares favorably. In fact, is one of the strongest growth rates, but you gotta be growing at that rate or even higher if you want to maintain your level along with Facebook and Google. And then finally, Snapchat, ticker symbol SNAP, year to date, just down 2%. When I show you the stock chart on this one, holy crap, this thing looks like it wants to head way lower. We'll talk about that when we get to the technicals. 52-week high on Snapchat, $83.34. We're down 42% on the high. So as you see, when you get off the podium of the top tier stocks, right now in this group, Facebook and Google are by far and away the Michael Phelps, the Michael Jordan, the LeBron James, the Kobe Bryant, the Tiger Woods. That's where they're at when it comes to online advertising. Look at where they're down just 5% and down just 15% from their highs. Twitter's down 45%, Pinterest down 55%, and Snapchat is down 42%. That would absolutely obliterate your portfolio performance if this continues. So you want to think about this as you construct your portfolio. Now, I think we've got to broadly start thinking about social media as well. Again, we kind of put aside Google to this to a certain degree. They're not necessarily a social media stock, although you could throw YouTube in there, but it's slightly different than what these other companies are doing, just slightly. Now, look, is peak social media already behind us? This is coming from Statista. Notice that now this is just for Q1 of 2021, so we're just getting a small read on this, but the amount of minutes on social media per user has been flat over the last few years and is now beginning to start to trend down. This will likely, in my opinion, probably be something that we continue to see, especially here in North America, where these are very, very mature products. And I'll show you evidence of that as well. We'll move on to Facebook, start things off. This company, obviously, I have high regard for this company, not quite as high as Google. If I were to start a portfolio of these stocks, I would allocate the vast majority of the portfolio to Google. I would allocate some money to Facebook. Everything else might get a sprinkle, especially at these valuation and these prices, which we'll talk about here in a second. Now, Facebook has held up very nicely this year. We'll talk about it from a technical perspective here very quickly, but I did want to show you there is evidence, in fact, very clear evidence that this company has just absolutely stalled out here in North America. Here on the bottom of their Facebook daily active users, you see here North America has basically been flat since Q1 of 2020. We've been at about 198 million active users. And obviously there's only a certain amount of population here in the United States, and only a certain amount of people are going to be a daily active user on Facebook, but it's a huge number, okay? 195, 196 million, but this is not a number that's likely to continue to grow. Now, where is Facebook seeing their growth? They're seeing it in Asia, rest of world, a little bit of Europe as well, although Europe is starting to slide sideways as well. All things being considered, I would guess we're 24 months away from Facebook basically being fat from a user growth perspective, okay? The rest of the world is going to catch up. It's not as mature of a product in those countries, but it's going to catch up. It'll eventually get there. The amount of users that are going to use Facebook in the rest of the world will get there, and that'll be it. The growth rates will be over for Facebook. But what Facebook is doing a nice job, despite kind of the flat kind of user growth here in the North America and the European market, they are squeezing out some more revenue here. We see very strong revenue of $29 billion. Now, what separates Google and Facebook in particular from the rest of this group are the profits. Off of $29 billion worth of revenue in a quarter for Facebook, we had over $10 billion worth of operating profits over at Facebook. So they clear over a third of their income all the way down after they pay all their expenses, okay? Outside of interest income, they make over a third of their income down to income from operations. That is fantastic. That is what puts you on a gold medal. Okay. We see this with Tesla. We see this with Apple. We see this with great companies, very well-run companies. In fact, we see them pull down tons and tons of net income and operating profits. That is what Facebook does. That's what separates Facebook and Google in particular from the rest of the group. Now, from a technical perspective, Facebook is pulling back. Okay, in the shorter term, we were in a pretty nice uptrend. Okay, so this stock made some lows down here. This is after an epic run. Okay, and we talk about this stock every week on our Friday Fang Stock Recap Show. We go over the technicals in the news from Facebook every single week. So this is a stock we cover every Friday. It's gone on an epic run. It is pulled back. I thought we could retest down here at about $300, which were the previous highs with Facebook. Okay, Facebook, after the big March run, like a lot of stocks made, peaked out at about $300 per share. It traded sideways between 260 and 300. Once we broke above 300, boom, we went all the way up to 385 on this one. But we got rejected up here at 385. We've came back. We found some support here at 315, bounced back to what now appears to be an intermediate zone, now looking like resistance at about $340 per share. And we put up a big red candle today, okay? And that breaks this low, higher lows up here. Now we've broken below the previous lows. That means this uptrend is over from a technical perspective. Now, does it mean this stock is going to continue to go lower? It tells you that it has a high probability of it doing that. I would guess that Facebook, like probably the rest of the broader markets, is going to trade lower in the coming days. That means we could potentially get areas down here at about $315 to buy Facebook shares. We could get them even lower if we break that 315 level, maybe even more specifically about 310 on this one. We could get down here to about $300 per share on Facebook. That's where I would really like to buy the dip on Facebook. Now, taking a look at Google, I will save you some time. I've just done an earnings report on Google. Nothing has changed. My opinion about this company and its financials have not changed one bit. Their financials are about as good as it gets, okay? Is Microsoft maybe a little bit better and a little bit more diversified? Absolutely, okay? Is Apple a little bit better and a little bit more diversified? Absolutely. But Google is right there, probably in the top 4 or 5 companies that I would build my entire portfolio around. Okay. And we've seen this company can insulate itself as Snapchat and Facebook, they start fighting for users, and active monthly users start running out, where we're not necessarily seeing that with Google, and their business is slightly more diversified, okay? They have the search engine, which has a dominant position, okay? Not just here in the United States, but other parts of the world as well. And then you have YouTube as well, which has a very dominant position inside video. In fact, most of you who are watching this, I'm probably speaking to the choir to a certain degree. Now, from a technical perspective, Google's done some weird stuff, man. It not necessarily in a bad way, okay? It had a mega uptrend. We were in a big old uptrend on this one, and now we're trading sideways. I would guess, my guess on Google is we're trading between about 37 and up to about 2,900, maybe even as high as about 3,000 on this one. I think you're going to be in about a $300 trading range on this one, which is about a 10% swing up to bottom. And look, that's about where I think Google, I don't necessarily think that this stock will reverse trend and go lower, but any sign of that is we've got to get below 2,700. That is acting as our level of support right now. If Google happens to break $2,700, I would guess the rest of these stocks that we're going to cover on today's show will break that level as well, and it'll be lookout below. I wouldn't necessarily anticipate that unless we get a much broader market pullback, which could materialize based on some of the news cycle that we see flowing through the markets. My guess is the markets will find its footings. Google will find its footing between 27 and about 3,000. I would expect us to travel sideways for Google in the most immediate future. If it doesn't, on the bull case scenario, we really need to get about 3,100, maybe even as high as 3,200 on this one to really get back up into our upward channel and really say, hey, this uptrend is still intact with Google. Moving on to Twitter. Now, this, in my opinion, is probably the loser of the bunch. Okay, when you look at the stock chart of this one, you bring it out to a max kind of 10-year view, you see that this stock went public at about $40 per share. And the stock is at about $40 per share. Yeah, you could have gotten this stock south of $20 and be doing very well. That's why when you buy these, maybe mediocre is not the word, but I'm going to use it. When you buy these mediocre companies compared to a Google, compared to a Facebook, this company is mediocre. Okay, you got to get it at a good price. And is $40, $43, $44 per share on Twitter a good price? We'll talk about it. Now, Twitter's been in the news big time recently, okay? Obviously, Jack Dorsey has left the company. He is no longer the CEO. It looks like he's also leaving the board of directors sometime next year as well. So he's going to be completely out of this one. And we'll see. I'm assuming he has plenty of shares of this company still left. We'll see if he disposes of them or decides to hold them. Now, there's been a lot of discussion about how, because we have a new CEO at Twitter, what's going to happen to the direction of the company. And a lot of people are saying, because this was an internal hire, so basically what they did is they just promoted someone already within Twitter. They didn't go outside the organization. They didn't go try to find some high-flying CEO and bring them into Twitter to give them a new direction. They simply just promoted someone that was already there ahead of a product over at Twitter, and they simply just promoted this person to a new role. A lot of people are speculating that this could just signal that Twitter wants to sell itself. And so getting Jack Dorsey out, getting him out of the company's CEO chair, getting him off the board of directors will allow this company to basically shed all of its founders out of its grasp and then maybe sell to a media company. But look, the regulators, we know it doesn't matter who's president. Okay, we know the current president, President Joe Biden, he's not going to allow Facebook to acquire Twitter. He's not going to allow Google to acquire this company. He's probably not going to allow Microsoft or Apple or any of the major tech companies that can afford this type of acquisition. Because let's face it, Twitter still has a $37 billion valuation. It's going to be difficult for another company outside of mega cap tech to justify this type of purchase. The other thing that we have to look at for Twitter, we'll look at their monthly active users here in a second, but I want to show you this is not a very profitable company, okay? Off of $1.2 billion worth of revenue, we had total costs in the most recent quarter. Now, these are skewed a little bit, and I'll show you here in a second, but we had total costs coming in at $2 billion. Now, it does have this litigation settlement, which I am assuming is one time, but it's a massive fee, okay? This company had to settle with some shareholders to the tune of over $800 million. Now, they got a little bit back with an insurance claim. The total expense that they had to recognize was $765 million. Well, let's just do kind of paper napkin math, okay? We'll take this $2 billion, we'll minus off this $765. We're very, very close to $1.2, $1.3 billion. So that's just showing you this company is basically break even, okay? And this is off of last year, again, very much a break even company off $936 million worth of revenue. When we come down to our income from operations, you made just $56 million bucks, okay? It's not really that much money when you're talking about a company that is worth $37 billion. The other thing is when you stretch it out to the 9 months, you start including this litigation, you start including other expenses, this company is actually losing money. They're actually losing money from an income from operation perspective. Again, the vast majority of that is because of this litigation. In fact, it is because of that litigation. But even if you add this back into the result, you're looking at a company that just cleared about $100 million over the last 9 months, okay? That's only a $30 million run rate on operating profit. I just showed you Facebook. I could show you Google. These companies are wildly profitable, okay? They're clearing over a third of their income comes down to income from operations. Twitter is a disaster. It's looking really, really ugly. And what's also looking very, very ugly at Twitter, as you can assume, if Facebook's starting to dry up from a user growth perspective here in North America, well, guess what? So is Twitter. Look at this, active users. look, it's just gone flat over the last year. You're at 36, this is probably 36 million, 37, 38, 37, 37. I mean, this company is basically not growing anymore here in the United States. It has some growth internationally, but other than that, this company has gone completely flat from a growth perspective. So they're going to have to squeeze more out of the users that it has, and that could prove to be very difficult. Now, when we look at the stock chart on Twitter, investors are not buying anything that they're seeing here. In fact, I'm on a weekly view here, and this level that Twitter is at right now, which is right about $44 per share, we have not seen these levels there. The stock peaked out at this level in 2018. It peaked out again at that level in 2019. Once we finally got over the $44 level back in 2020, late 2020, October of 2020, well, the stock went on a monster run, basically doubled up to about $81 per share. Ever since then, we've been on a pretty steady decline on this one. Now, $44 would be a logical area where this stock could find some footing and could reverse, but I will emphasize, if we do break and we continue to go lower on Twitter, we are going probably considerably lower. I'm talking about into the 30s, potentially all the way down into the $20 per share on this one, because once you break this key technical level, well, sellers are just going to continue to pile and pile in. I'm also not seeing heavy volume as the stock begins to pull back, which is just showing me that the buyers are not necessarily really stepping in at these levels when it comes to Twitter. Now, before I would step in on this stock, and this goes for any of the speculative stocks that we're covering, which includes Twitter, Pinterest, and Snapchat, I would wait for a sign of a reversal. I'll draw your attention right here. This was like kind of the last time we had a big reversal, although we had one back here earlier this year. This is a much better one. Look at how we bottom out here. And again, understand that we are on a weekly chart. Each one of these candles represents a week of trading, basically 5 days or 4 days if there happened to be a holiday. Now, look, so we start making higher low, higher low, higher low, higher lows, okay? And this stock clearly started reversing trend, and it started putting up green candle after green candle, and this stock went from about $23 up to about $80 per share in less than a year. That is what you're looking for at some point with Twitter. If we happen to reverse here at the $44 range, we're looking for this stock to start breaking above the previous lows. So we need candles all the way starting to go upwards, okay? I probably wouldn't even get excited about this stock until we got about above $54 per share. I would assume, okay, we've made a shorter term bottom on this one, and we could go from 50 up to maybe about $70, $75 on this one, maybe even potentially retest the highs. That would be the trade I would want. I don't want any part of this stock chart. This looks absolutely disgusting. If we break this $44 level on this one is heading much lower. On top of that, we looked at Facebook from a technical level. If Facebook continues to pull back, well, I think he's going to grab and drag down the rest of this group as well. Now, Pinterest is not in necessarily that much different situation. This is a company that plays second fiddle, third fiddle, fourth fiddle, whatever you want to call it, to the rest of these companies as well. This company has absolutely no hopes of ever catching Google in terms of revenue and profits. It probably doesn't have that chance of ever catching Facebook in terms of revenue and profits as well, barring some kind of cataclysmic collapse by Facebook and its properties. This company has absolutely no hope of that. We're also seeing with this company that its user growth has stalled as well. They gave an update on their most recent conference call that US monthly active users were still at 89 million, and global MAUs, which is monthly active users, was up to about 447 million. I'll direct you to the last time this company reported. They had 89 million users, and that compared very unfavorably to the previous year when this company had 98 million monthly active users. This is here in the United States. Now, they are still seeing growth in their international markets, but they don't make anywhere near as much as they do here in the United States, where everybody has a credit card, everybody's doing buy now, pay later. Everybody runs up a deficit here in the United States. And I say everybody broadly, but the vast majority of people here in the United States do that. Monthly active users from a total level is just up fractionally, okay? not only year over year, but it looks like quarter over quarter as well over at Pinterest. Now, what we do like about Pinterest is this company just turned the corner, it appears, from a profit perspective. We've got our 3 months ended here. We cleared $632 million worth of revenue. We talked about how this was up about 40 some odd percent. Now, what they did a nice job in the quarter was they really eliminated a lot of G&A expenses, okay? My guess is you had stock-based compensation really come down in that sense. Everything else ticked up within reason, and that drove us actually down on our total costs and expenses. We went down from 539 down to 534. You absolutely love to see that, okay? And that swung us from a $97 million loss last year on a quarterly basis all the way to a $98 million profit in the most recent quarter. I do like Pinterest from that sense. And so in some cases, Pinterest, in my opinion, could be the company. And I also like Pinterest from a product differentiating perspective, okay? Snapchat and Facebook and Twitter all are about the same, okay? I know they all do different things. I know they all have different varying consumer groups and people that like the sites, but it's basically the same thing. Pinterest is a little bit different, okay? It's kind of an idea kind of search engine, so I like it from that sense. They're never going to be Google. They're never going to be Facebook, okay? From a revenue or a profit perspective. But if you can get this one from the right price, this stock has rallied, okay? Back in 2020, March of 2020, this was a $12 stock, a $12 stock. A couple of months later, this was a $90 stock. So it shows you, look, these smaller companies, these silver medals, bronze medalists, these second tier companies can have epic moves. You have to get them at the right price. Now, we are seeing that Pinterest is just carving through areas of support. There was some support here at 70, carved through it. There was some support here at 55, very little. It carved through it. There was a little bit of support here at 44. Again, I am on a weekly chart. Each one of these bars represents a week of time. So keep in mind, there is some more candles running through here if you look at it on a daily perspective. There was some support at 45. It carved through it. We are now here at $40 per share. Underneath that, we do have some areas of support at $35 per share. That's where the stock peaked out way back in 2019. And again, right before it made its epic run, once it got above 35, I mean, this stock got rejected at 35 and went all the way down to 12, came back up to 35, hung out there for about a month or two, and then boom, exploded. We, in my opinion, are probably coming all the way back to $35 per share on Pinterest. This stock just, it has no momentum. Again, just like Twitter, if you want to step into this one, I would wait for a sign of reversal. We are not, absolutely not preaching buying the dip on this one, catching a knife. What we are preaching is watching this and watching for these signs of reversal, okay? This stock made a big reversal right here, okay? It made a low, higher low, higher low, higher low. Came down here, retested kind of the bottom end of the range, but then higher low, higher low, higher low. Okay, you didn't have to get this one at the bottom. You could have bought this one on the breakout of 35. That's actually what I like with this stock, okay? That's where I would have liked to play this one. Once we broke above 35, it was off to the races, and you could have gone from 35 in September of 2020, and just a couple of months later in February of 2021, your stock would have been up to $89. So you would have went from 35 to 89 in just a couple of months. That's what we want to do with these second tier stocks. We don't want to pay a premium. We want to get them. We're on the trash heap. When everybody's throwing them out, that is when you get it. That is the only time you would get a second tier company. And on top of that, Google and Facebook cannot be thrown out as well. If Pinterest continues to pull back, but then Facebook puts a big old red candle down and pulls down to areas that we haven't seen in months, well, I'd much rather put my money into Facebook. I'd much rather pull my money into Google if we break a level of support and we come way down on this one, okay? So if all these stocks come down, I still pile in to the gold medal winners. But if the gold medal winners stay strong and they're doing fine and they're holding their levels of support, but everything else is getting thrown out with the trash, well, then you can go digging through the trash a little bit, okay? A little bit. I wouldn't get over allocated. I wouldn't have more of an allocation in Pinterest versus Facebook or Google. I would always have more money in the gold medal winners, but you can set these up as a trade, a shorter term thing. If you are going to buy these, I would set an entry point, a stop loss, and a point where I'm going to start to get out of this one. Now, let's just assume I'm correct. Pinterest is going to come down here to 35. It's going to eventually form some kind of bottoming formation. I would play it on the breakout back above 45, okay? And this is over the longer term. If we break above 45, let's say later this week, wouldn't really be interested on this one, okay? We are still, even when we break above 45, we're still in this major downtrend, okay? And so I'd want to see some kind of bottoming formation. This one start to inch its way back. You get above 45, it will have taken out likely the previous lows, and now we're making higher highs. Then I think you could potentially step in on this one. Now we're going to take a look at Snapchat. This company's in a similar position. I can't believe this. This company has an $80 billion valuation. 80 billion. This is making Twitter look really good. This is making Pinterest look a lot better from a valuation perspective. This company is wildly, I mean, we're talking wildly overvalued. Now, I did point out at the beginning of the show, this company has the highest growth rate. So it makes sense that the market does give this stock a little bit of a premium to its market cap, to its valuation, compared to its peers, because it is growing at a very, very fast rate. In fact, 57% to be exact year over year on its most recent earnings. Now, what I do want to show you though, is this company is doing the exact same thing as the rest of these stocks. Its North America user growth is flat. Okay. Yes. Year over year, you're up 7%, but this is starting to flatten out and it's looking really bad. Rest of the world, of course, you're going up 49%. Internet access isn't quite as accessible in those parts of the world. Not only that, these sites aren't as mature in those parts of the world, but in 12 to 24 months, a lot of that is probably going to change. And you're going to see the rest of the world user growth starting to flatten out. North America and Europe are going to continue to flatten out, if not start to trend downward. Okay. And that could spell very, very troublesome signs. In fact, the market might actually be forecasting that with a lot of these stocks. It could be that the market is already 12 to 24 months ahead on these stocks, okay? And they're saying, look, the rest of the world, who cares? We're going to make pennies on these users. Who cares what those numbers are? It's North America and Europe where the people that have the credit cards and spend a ton of money on ads and buying products that they don't necessarily need, that is where the money is. And we're seeing that group absolutely flatten out from a growth perspective. Now, Snapchat from a fundamental and a financial perspective, also not that attractive. Okay, you had $1 billion worth of revenue, fantastic revenue growth. Okay, like we talked about, 57%. You went from 678 up to over to $1 billion on this one. Unfortunately, our costs are rising at nearly an identical pace. You had cost and expenses coming in at the quarter at about $1.25 billion. Obviously, that exceeds our revenue. So we've got an operating loss on this one in the most recent quarter at $180 million. So despite the absolutely phenomenal revenue growth of over 57% from 678 up to $1 billion, take a look. Our operating income went from 167 negative, that's a $167 million loss, up to $180 million. So this company has not even come close to turning the corner like Pinterest. That's why Pinterest probably piques my interest, so to speak, more than the rest of these companies, because it actually has turned the corner in terms of profitability. Now, Twitter is also very lightly profitable, but we're also seeing their user growth starting to flatten out. I also view that as kind of a very, very, very niche platform with not a lot of upside in terms of what else you can add to it in order to extract more money from advertisers, extract more money from users. Could be wrong in that case. You could definitely let me know down in the comments if you happen to disagree with that. So from a fundamental perspective, I don't like Snapchat. From a technical level, holy crap, I'm like throwing up over here. I hate this, okay? Look at this. We had a big old move here. We peaked out about $82 per share like we talked about, and we have just been, oh my goodness, look at this big old red candle in a week. We went from $80 per share all the way down to 55. It does not look like we're setting any kind of reversal pattern up anytime soon on this one. Now, it could materialize, but we are below now an area of support. This $50 level, I'll remind you, we're on a weekly chart. Look how many weeks hit this $50 level, okay? There's like at least 6-7 weeks where we hit 50 and we bounce. We hit 50, we bounce. We hit 50 and we bounce. Well, look what happened this week. We hit 50 and we carved right through it. That's not good. I repeat, that is not good from a technical level. We are likely coming down, I would guess, potentially down to about $40 per share on this one. That would be the very first area where I might think a little bit about buying Snapchat. But then again, it would depend on what Facebook and would depend on what Google shares are doing. If they have also pulled back, I'd rather take my dollar. My dollar does not care. It knows no difference between Snapchat and Facebook. All my dollar wants to do is make more dollars and have more friends. So if all these stocks continue to pull back, Facebook and Google in particular, I'll take that dollar. I'd rather put it into the gold medal winner. If those stocks stay firm and I want to get a little more exposure to online advertising, which I still think is a great business, high margin business, and if these companies can start shedding off some of their costs, which I think they're going to have to do over the next 12 to 24 months to kind of appease investors and get them excited about this stock again, okay? Because the user growth, nobody's going to be excited about this user growth anymore at Snapchat or any of these companies. No, that's not going to be the story anymore. It's not going to be this user growth. It's going to be profitability. So these companies could really shed employees. They could shed a bunch of stock-based compensation and start turning these numbers around. That is what could send these stocks higher. But I would wait until we pulled back to an area of support, which in Snapchat's case is about $40 per share. Now, if we break this $40 level, we got a big old green candle here that's just sitting by itself. If we break 40 on Snapchat, look out, $20, $25 per share. That is where this one is heading, and it would be an absolute bloodbath if it happens. The other thing that I'm noticing on this chart is we barely have any volume. Yeah, there's a little bit of volume here, but the buyers are just not stepping in. Okay, you would expect, even as prices decline, if buyers are kind of stepping in, you'd expect some volume expansion. We are not seeing that. These stocks are just a hot knife cutting through butter. I would not step in until we see an area of reversal. So on today's show, I hope you learned we pile into the gold medal winning stocks. And here is why we consistently talk about it here on the channel. We almost never pump a microcap stock, a second place stock, a second tier stock. We don't pump any of those stocks on this show. And this is the prime example. Over the last year in the online advertising space, Google is up 66%. 66%. Now, if you are overweight Google, your portfolio is absolutely on fire, okay? And even if you are overweight Facebook, you are still absolutely on fire. That stock is up 23% just year to date. And look at everybody else in the online advertising space. Everybody else, the second tier, the second place, the third fiddle, the fourth fiddle. Twitter down 15%. Pinterest down 38%, Snapchat down just 2%, but I just showed you that chart. It looks really ugly for Snapchat. Looks like that stock wants to continue to go lower as well. Remember, here on the Investor Channel, I can't emphasize this enough. The vast majority of your portfolio needs to go into the market leaders. And then when you have a little extra money and you want to speculate, I got no problem speculating. You need to speculate at the correct prices, the correct levels. We saw with Pinterest, you could have made a ton of money if you brought it at the right level. A lot of people did not buy this at the correct level, and it continues to pull back. So we're waiting for signs of reversals in Twitter, Pinterest, and Snapchat. If they don't reverse, we could get some absolutely smoking hot buying opportunities on those stocks as they get thrown out with the bathwater. But we're only buying Pinterest, Twitter, Snapchat if Google and Facebook happen to hold their levels. And I still probably would rather pile more money into these stocks because I still think, especially in the case of Google, this company has a long runway. It has a diversified product offering, and online advertising is not going to go anywhere in the near future. Hopefully, you guys enjoyed this video. Hopefully, it helped you with some of your investment ideas and opportunities out there. Good luck with your investments.